Yesterday, over $2 trillion were wiped off the stock market, and financial headlines screaming crash. But is this just a small correction that the market will recover from quickly? Or could this be the beginning of something far worse? Well, the crash of 1929 started in a similar manner. A sudden panic that eventually spiraled into the worst economic disaster of modern times. But what exactly happened back then, and even more importantly, what lessons can we learn from the Great Depression to turn market chaos into your biggest opportunity? But alright, so let's begin here by answering the question, what was the Great Depression? Well, the Great Depression was the worst economic crash in modern history. And it began after the stock market collapse of 1929. And it lasted for a long period, pretty much throughout most of the 1930s. And the scale and impact of the Great Depression was massive. As you can see, for example, it led to a US unemployment of around 25%. During the Great Depression, the US saw over 9,000 bank failures, and global trade actually collapsed by more than 50%. And we will return to this later, but this actually ties a little bit into the worries about global trades that we have today. Trump just recently announced tariffs on basically the whole world, and this is a large reason why we are seeing the stock market crashing right now. But here, it is important to notice that the Great Depression had a lasting impact, and it fundamentally basically changed how governments and markets work today. It basically created new financial institutions, social safety nets, and also helped reshape economic policy all around the world. But now then, and this is very important, what caused the Great Depression? Because if we can understand the causes of the worst economic crisis of all time, we can hopefully apply this knowledge to avoid getting caught up into one of these crashes ourselves. So, in simple terms, the Depression wasn't caused by a single event or a single factor, but rather it was a combination of multiple factors that created a perfect economic storm. And one of these factors that, at least in my opinion, often are overlooked when it comes to the Great Depression is the sort of easy money and speculation that led up to the Depression. So after World War I, the US economy saw a very good period. The economy boomed, and that is why it's called the Roaring Twenties. And here, from 1921 to 1928, the US money supply grew a lot. It actually grew over 60%. And this is very important because if you look at the recent money supply in the US, we can see that we are seeing the exact same thing. We are seeing a lot of growth in the money supply. Also, interest rates were low and credit was easy. And by this, I mean that it was very easy to borrow money, for example, borrow money to speculate on stocks and so on and so on. So here you can see that people started buying stocks on the margin. And this is basically when we are using borrowed money to invest. And if you want to learn more about margin and leverage, I actually do have a video about that, and I will make sure to link the video both up in the video card as well as the description. But for example, if you use margin, you can, for example, use only $10 to control $100 in stocks. So if stocks fall, you still owe the full $100. So you can potentially gain more, but you can also lose more. But now, what about the 1929 stock market crash? Well, stock prices became dangerously overinflated. Much of this was because of the easy money and all the borrowing and speculation. And in October 1929, the market dropped 33% in just weeks. So it is important to notice that the stock market crash we are in right now, we are far from 33% from the top, but we are starting to, see some pretty brutal numbers. And here, margin calls forced people to sell fast. And this created a vicious cycle that made the crash worse. So when people are forced to sell, this can lead to even more panic, which is forcing even more people to sell, and so on and so on. During the Great Depression, we also saw multiple bank failures. Back then, there was no FDIC, which is basically a thing to protect your deposits. So when people got scared, they rushed to take out cash from the banks. And banks eventually ran out of money and collapsed. And as we mentioned earlier, over 9,000 banks failed. And here, and this is key, what about the policy and the gold standard during that time? Well, the US was on a gold standard, so every dollar was tied to gold. And this basically limited how much money could be created. So instead of printing money like, we always do today, when things get bad, the central banks tend to print money. The Federal Reserve actually raised interest rates, and this led to prices dropping or deflation. And here, this is a very sort of double-edged sword, and this is not simple because yes, we can print money often to solve different kinds of crashes and economic crises, but when we print money, this actually leads to the people holding assets. The people holding assets, which is often the richest, their assets will grow even further, while it leads to inflation for the poorest people. So money printing often makes wealth gaps even worse. So money printing can be a solution to crisis, but at the same time, it makes the wealth gap worse. And as we can see in the US today, the wealth gap is just getting worse and worse and worse, partly because we're printing so much money. And here, and this is very important because this is super relevant to today, tariffs and global trade war. So in 1930, the US passed the Smoot-Hawley Tariff, raising taxes on imports. This is basically what a tariff is. And if you haven't watched it already, I made a video yesterday about what tariffs are and how they work. So I highly recommend to check that video out after this video. But what this basically led to other countries retaliating with their own tariffs, and we are already seeing this playing out today. Some countries have already retaliated on Trump's tariffs, and multiple countries are in discussions about, when to retaliate and how much, and so on and so on. But however, eventually this led to world trade falling over 50%, and this spread the depression globally. And this is another factor we can look at today. Yes, the US markets are getting hit the hardest right now, but the stock market crashes is spread all around the world. For example, I live in Sweden, and the Swedish stock market dropped around 4% yesterday. But all right, so now I want to dive a little bit deeper here and talk about the similarities between the Great Depression and the time we are in right now, 2025. So for context, yesterday, or on April 3rd, 2025, the US stock market had their worst day since 2020. And this was after Donald Trump's Liberation Day tariffs. And here are some statistics. The S&P 500, the largest stock market index in the world, dropped 4.8%. That is massive. It might not sound massive. Maybe you are a crypto trader, then this is like a daily normal thing for you. But having the stock market dropping almost 5% is a lot. And you can hear it right here. Over 2 trillion in value got wiped out. And Trump imposed tariffs on the whole world. But I think China was the country that got hit the worst with 34% additional tariffs, and I think this was on top of already 20% tariffs. So a total of 54% tariffs on China, at least some products. And this sparked massive fears on a potential new global trade war. So here we might ask ourselves the question, is history repeating? Because this is in many ways similar to the Smoot-Hawley Tariff of 1930, which made the Great Depression much worse. And like in the 1920s, we have just lived through years of very easy money and low interest rates. Remember, during COVID, we even had negative interest rates and tons of money printing. And we are seeing indications and signs of asset bubbles forming in, for example, tech, maybe crypto, and maybe AI stocks. However, it is remain to be seen if these are bubbles or not. And it's also important to remember that if the governments just keep on printing and printing money, it's very possible that we can just print our way out of this crash too. But remember, the more money we print, the more likely it is that the wealth gap just continues to grow. So it's basically a lose-lose situation. Will the market crash, or will we continue make the rich richer and the poor poorer? This is at least how I see this issue, and I think it's a massive issue. And now a policy shock, just like in 1930, is hitting the markets pretty hard. But now, and this is very important, what can we as traders and investors learn from the Great Depression and the stock market crash? Well, one thing we can learn is that liquidity fuels both bubbles and burst. So liquidities fuel stock market euphoria, but also stock market crashes. Easy money leads to excessive risk taking, and when eventually liquidity tightens, a crash can quickly follow. By the way, if you want to learn more about what liquidity means, especially what liquidity means in trading, I do have a video about that, and I will make sure to link the video in the video card. Another very key takeaway here that we can't, ignore is that policy moves market. Policy moves market a lot. Tariffs, rate hikes, or even currency changes can transform markets basically overnight. So from this, an important takeaway is that don't over leverage. Margin debt wiped people out in 1929. So using too much leverage is definitely something you want to avoid. Make sure to watch my video on leverage, and make sure to use risk management. For risk management, I do have a video about that as well, and I highly recommend to check that one out. But last but not least, and this is very important, panic is opportunity if you are ready. Crashes reward investors and traders with, cash, or with discipline enough to actually trade falling markets. Most fortunes are made in bear markets, not in bull runs. Alright, so we are living through a critical time, and it's more important than ever to stay informed and prepared. So if you haven't already, I highly recommend to check out this video about what are tariffs, how do they work, and why are they so important to understand in this economic climate.